Mark Mahaney joins us now, though. Speaking of losses, Mark, Amazon is down today, but you just raised your target price from $285 to $335. Are you ignoring that report?
I'm sorry, Stu. It's the other way. We lowered our price target down to 285.
Oh.
We're sticking with it. I started the year. That's right. I started the year saying this was my top pick, and I'm not looking too smart right now. But I'm going to stick with this. We have we're going through a free cash flow desert. I mean, the level of investment is greater than I and the market had thought, at the beginning of the year. You add up the CapEx, capital expenditures amongst the four biggest companies, Google, Amazon, Meta, and Microsoft. It's over $600 billion. I think in all fairness, the market would have thought maybe $300 to $400 billion at the beginning of the year. Like, it's dramatic, the investments. So the question investors have to ask themselves is, do you think you're getting a good return? Are they going to get a good return? And then are you going to get a good return on these investments? And I think some of the data points, I think, have been very positive. I look at AWS grew at 24% in the last quarter. That's the fastest growth they've had in years. They actually outpaced every other cloud vendor. They had margins that were close to record high. So the fastest growing, most profitable part of the business, that's what they're investing in, and they're seeing a return in that. But, I understand the market's going to be skeptical until they can kind of get through this desert and start showing free cash flow growth again. And that's probably not till next year. The market will discount that. So sometime in the middle of this year, I think we're going to get another rally going in a name like Amazon. In the meantime, Google and Meta, both of those showed accelerating and multi-year growth rates in their search and their advertising businesses. And I think it was because of AI. So I think there's a lot of proof points that AI and investments are working, but you have to have faith in it.
Well, it's the same story with Google. You've moved.
Yes.
This is where you have raised your target price.
Yes.
It was $325. Yeah. Now you're aiming for $400. So you're still confident that they can spend all this money and get a valid rate of return down the road. You're still confident of that?
Yeah, and Google's big advantage is they've got so many different ways to monetize AI, whether it's search or whether it's YouTube or their cloud business, and they're kind of what's called a fully integrated tech stack. Like they sell the chips, they run the cloud business, and then they have those huge apps that we all use, things like search and YouTube, and then they got this wonderful asset in Gemini and personal intelligence. So I think they're probably the easiest AI story. And then the last thing, just so we're not only doing this on faith, we're looking at valuation. And if you look at the PE multiples on these three names, they're somewhere between 20 and 25 times earnings next year. Like, you're not paying nosebleed valuations for the three probably biggest beneficiaries of AI, at least in consumer tech. Apple to be determined, Microsoft not so much consumer tech. And I think those valuations are very reasonable. So I'm going to stick with my guns here. I like all three of the names. Top pick still is Amazon. Then I'd probably go Meta, then Google.
But is the money available? I mean, you're talking about an investment of $650 billion by just four big tech companies. Is that money available? Have they got it, or did they have to go out and borrow it? Because that would be bad.
Most of them have the cash flow. These are extremely profitable businesses to begin with, so they're self-funding this for the most part. Amazon's going to have to dip into the debt markets because that's the one that's but it's not. I mean, it's not like these are highly levered companies. They've got, they're and they can easily cover all of their interest expenses. But the other ones, Google and Meta, they've got all the cash flow they need to fund these. They're self-funding. That should give investors some confidence.
It's extraordinary, isn't it? We're talking $500 billion or more just by four companies. That's extraordinary. Mark, you have a great weekend. We'll see you next week. Good stuff.